It's a glimmer of hope after years of trying to rein in inflation in this country. Today's Consumer Price Index reveals that for the first time in years, inflation slowed to 2.8%. Positive news that could change the course of the next few months, but we're not out of the woods just yet, especially when it comes to high prices at the grocery store. Canada's inflation rate tumbled to 2.8% in June, putting it within the Bank of Canada's target range for the first time in more than 2 years. Stats Canada says the fall was broad-based, though lower gasoline prices compared with last year led the slowdown. The annual inflation rate was 3.4% in May. The last time it fell below 3% was March 2021. So, good news, right? Well, kind of. Canadians continue to pay substantially higher prices for groceries, as prices rose 9.1% year over year, slightly faster than in May. And core measures of inflation, which strip out volatility, have not eased as much. The Bank of Canada pays close attention to its preferred core measures of inflation to gauge underlying price pressures, and these measures are still hovering between 3.5% and 4%. Earlier this month, the Bank of Canada raised interest rates again, in part because it's now projecting inflation to stay higher for longer.
Looking ahead, we continue to expect economic growth to moderate and inflation to ease. But this will take longer than we forecast in January and April.
The central bank said last week it expects inflation to hover around 3% over the next year, before steadily declining to 2% by mid-2025. While today's report shows inflation falling within the central bank's 1 to 3% range, the Bank of Canada has been adamant that it wants to see the rate at 2%. The rate hikes are intended to choke off demand in the economy by making it more expensive for consumers and businesses to borrow. That process is supposed to bring inflation down, though in the meantime, it's driving up the interest Canadians pay on their mortgages.
We are also acutely aware that higher interest rates are making life more difficult for many Canadians. And we know many Canadians are asking, is the Bank of Canada done raising interest rates, or will rates need to go still higher to relieve inflationary pressures? The short answer is we will be taking each decision based on the available information at the time.
Mortgage interest costs were up more than 30% from June 2022, when the Bank of Canada's key interest rate was 1.5%, compared with 4.75% for most of June 2023. With July's quarter percentage point rate hike, the central bank rate is now 5%.